Where are you spending all that money right now?
Our favorite market right now is Japan, has been for a while. We also like healthcare a lot, particularly pharma, not necessarily biotech, but more biopharma, one notch down. We like technology and still like China.
Not concerned that pharma technology is feeling overvalued in any way?
Actually, we go the other way. We think there are certain pockets of biotech and some of the small cap tech that's really overvalued. But think of Apple. Apple's cheap. You look at its PE ratio, it's lower than the market, its growth. I mean, look, they made more in the first quarter than the bottom 400 companies of the S&P for the last 5 years. In one quarter.
So are there S&P companies that are outperforming just because the market is moving up? But if you actually look at those companies versus Apple, they pale in comparison?
Yeah, absolutely. Look, indexing and ETFs are, I hate to use this word, and I mean it in rule-based terms, so I won't use the word dumb, but they're rule-based. So they must buy things no matter what the price. So if you have a basket and people put money in the basket, which people are flooding money in index funds, which they do near market tops all the time, not saying that this is a market top, but they tend to do that because they like the cap weighting. And so a lot of companies rise with the tide.
Can I beat you up for a minute?
Sure.
Yes.
Over the performance of the Morgan Creek Tactical Allocation Fund?
Absolutely.
Why isn't it performing better? You're a bull on Japan.
Yeah.
I don't see Japan among your top holdings. I do see Apple there.
Yeah.
I do see American Airlines. We've talked about that for a while.
Yep.
This is the mutual fund that you've started managing.
Yep.
There's a lot of leveraged exposure to U.S. equities.
Yep.
What's going on?
Well, it's a good question. So Japan's been great. We got about 7% in Japan. We should have more. Mostly Japan financials. And they were quiet January, February, and have really come on lately. So that's been catching us up. We didn't have enough exposure to China. We've been big China bulls, and we didn't have enough exposure there. So that was bad. Our biggest exposure was airlines. And airlines were great for us last year, have been really tough in the first quarter as people, I think, are confused about the fact that the average price of oil last year was $93. This year it's in the 50s. So for some reason they think going from 50 to 60 hurts the airlines. It doesn't. I think the airlines are fantastic the rest of the year. But they've been tough this year, down about 20% so far. Had a good day yesterday. And then finally, we lost a little bit on Greece. So I still think Greece is yet to come this year, but we lost about 100 basis points on Greece.
You've got cash and you've got treasuries in there. How come?
We run it's a balanced portfolio. It's designed to replace kind of a 70-30 or a tactical allocation fund, some of the other mutual funds that do tactical allocation. So it's supposed to be balanced. So we've got a barbell in fixed income. We've got some cash on the short end and then some long treasuries on the long end.
Nothing in the belly of the curve.
Nothing in the belly, yep. But it's fair.
What do you hate?
We
only got a few seconds left. What are you scared of?
What am I scared of? I'm scared of global bond markets. I think there's a bond bubble. In fact, I'm going to spend some time later this afternoon with Julian talking about that topic.
Robertson. There you go, a little name dropping for you.
No, but I mean, I wrote about that in my letter, that he's concerned about this government bond bubble. And then Elliott manager Paul came out today. Singer came out today saying that he's scared of that too. So I think, it's scary.
Scary, but this is precisely what every central bank around the world is incentivizing you to do.
Yes.
Buy bonds.
Yeah,
right?
Well,
and buy sovereign debt, for that matter. They're buying sovereign debt.
Yeah, they are, but they want you to buy equities. And they're doing a pretty good job getting people out of cash and bonds.
Yeah, but if you can step in front of the central bank bid, you can make money.
Yeah, but I'll tell you what, I like short European bonds and long treasuries here. Okay. That seems like a pretty good trade to me.
Lions, tigers, bears, and bonds. That's what keeps Mark Yusko up at night. Mark, thank you so much for joining us. Do you know why he has to leave? Because I don't know if you heard him. He's got to go see Julian. Yeah, a little more important than Eric and I. Mark Yusko, he's the CEO of Morgan Creek Capital.